Now it's time to focus on the biggest global headline we are tracking. Remember, I told you while US market checked that two macro mites, US and China, will temporarily lower tariffs on each other's products. The combined 145% US levies on most Chinese imports will be reduced to 30%, including the rate tied to fentanyl by May 14. While the 125% Chinese duties on US goods will drop to 10%, in a separate address, US Treasury Secretary Scott Bessent indicated that both sides had a productive discussion on steps forward on fentanyl. Added that both countries do not want decouple. The statement also said the parties will establish a mechanism to continue discussions about economic and trade relations. In the same address, US Trade Representative Greer said US wants to have more balanced trade with China. Here a word from President of United States Donald Trump after administration announced the contours of the said deal.
Yesterday we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days. And I want to tell you that a couple of things. First of all, that doesn't include the tariffs that are already on, that are our tariffs, and it doesn't include tariffs on cars, steel, aluminum, things such as that, or tariffs that may be imposed on pharmaceuticals, because we want to bring the pharmaceutical businesses back to the United States, and they're already starting to come back now based on tariffs.
That was the US President Donald Trump on the latest US-China trade deal. But let's also listen to what US Treasury Secretary Scott Bessent and US Trade Representative Jamieson Greer had to say about the agreement between US and China.
The consensus from both delegations this weekend is neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo, and neither side wants that. We do want trade. We want more balanced trade, and I think that both sides are committed to achieving that. We would like to see China open to more U.S. goods.
This agreement is really about the reciprocal tariff which was imposed by the United States on April 2nd. The United States earlier this year imposed 20% related to fentanyl. That still exists. So if you're looking at Trump Term 2, tariffs on China, right now effective, it's 30%. There are prior measures which change by product, by sector, by level, etc. You can't really give a specific number on that right now. What matters for the agreement today is that we each agreed to come down on the reciprocal tariff and related retaliation to 10%. We're having very constructive conversations with our Chinese counterparts.
Also important commentary coming in from some Federal Reserve officials. Governor said that the 90-day pause on important levies reduces the need for central bank to lower rates in a response to an economic slowdown. She said the tariff rates, now 30% on Chinese imports for the next 90 days, was still pretty high, and she expected definitely an increase in the prices and a slowdown in the economy, but as a result. But Kugler expects that impact to be more muted. Meanwhile, Chicago Fed President agreed that weekend deal would lower the impact tariffs have on economy for now.
All right, then moving on, like we have been telling you since the start of the show, all eyes will be on that key inflation print from the US later today. April Consumer Price Index is expected to show the first clear signs of inflationary impacts from President Trump's tariffs. Now, headline annual inflation is forecast to come in at 2.4% in April, flat from March's increase. On a month-over-month basis, prices are estimated to rise 0.3%, above the 0.1% decline seen in mid-March. On a core basis, CPI is expected to have risen 2.8% over the past year in April, unchanged from the month prior when core inflation hit its lowest level in 4 years. Meanwhile, monthly core prices increases are anticipated to rise 0.3% ahead of March's 0.1% rise.
We'll be watching US CPI not only there but in India also. CPI will be declared later. But headlines revolve around the two macro might this morning. Now JP Morgan has lifted its forecast for China's economic growth following what it is called surprisingly positive deal with United States to dial down on the two countries' trade war. They estimated that as long as new tariff rates are maintained for the rest of the year, China's full-year GDP growth rate would hit 4.8% compared to the bank's previous forecast of 4.1%.
That's right. Meanwhile, Goldman Sachs has adjusted its economic outlook for 2025, citing recent developments in trade relations between US and China. The firm has raised its growth forecast for the fourth quarter of 2025 to 1% from the previously expected 0.5% and simultaneously reduced the probability of a recession occurring within the next 12 months to 35%. Now, Goldman Sachs anticipates that the US effective tariff rate will see an increase of 13 percentage points, slightly below the previously assumed 15 percentage points.
If you like this video, then like, share and subscribe to ET Now.